The economy is seeing a double whammy, both from inflation of cost and also deflation of capital. At the same time that prices are going up for everything, home prices, interest rates, gasoline, groceries, insurance, taxes. First of all, people have less cash to spend on them because incomes are reducing. There's no stimulus money anymore. But more important is the wealth effect is starting to hit consumers. A lot of times people would spend money even without income if they thought they had capital reserves, like their 401k fund was through the roof, their cryptocurrency holdings were high, their home value was high. And so for the last 12 to 18 months, people saw stock values go up, their 401k account went up, their cryptocurrency went up. So they said, well, even if I don't make the income, I can spend some money on home modification, new car, clothes, going out to eat, those kind of things, because I have more cash in the bank in my 401k. Well, now when the stock market's crashing, $5 trillion has gone away from Americans' wealth perspective. So everybody's less. So that's when you start tightening your belt. What happens when consumers start to spend less at the same time that there is inflation? At the same time that gas is $6 a gallon. What happens is the sellers of those items have even more problems, because even though they've raised prices of things, $6 for gas, $30 for a plate of wings, whatever you're selling, you still have overhead. You still have to pay your bills. And part of that price increase pays for their increased cost. You know, people have a higher hourly wage now. There's more expenses for the business. Their cost of buying materials is higher. And they price some of that into the cost of goods. However, most resellers or manufacturers have not completely put all their cost into the new price, meaning that if their cost went up 50%, they might have only increased prices 30% because they didn't want to put too much into the retail price increase to try to keep business, figuring that they would have some volume to distribute their profit over their fixed expense. Well, now that volume of sales is going lower, that is backfiring. So now you have the retailers, even companies like Walmart, Amazon, Kmart, they're gone, and Target are now finding they're having less sales even with prices being higher. So their revenue is not going to be enough to pay their expenses. In fact, there's already been some rumblings that the three cheap retailers, Target, Walmart, Amazon, are going to start cutting their expenses, cutting employees, cutting staff, having less office space and retail space because they're not making enough sales to cover that. Here's the other thing. If inflation has gone up, let's say 10%, roughly, and sales has gone down even 2%, or even if sales stayed the same. Look at it this way. If inflation went up 10% on prices and the sales for GDP was the same as it was before, that means in actuality the volume of sales went down 10%. Because sales, GDP, is based on dollar volume, based on dollar transactions. So if the inflation rate made the dollar transactions be 10% more, then sales should have went up 10% just because of inflation. And if it didn't, that means sales are reducing already. It doesn't bode well for next 2-3 years. Is a recession here? Who knows? Main thing is start reserving capital, and inflation will continue. So if there's any major purchases coming up and you can afford it, maybe put the money into that now so you can have a better return on your money. Look, if inflation's going to be 10%, buying something that you would purchase anyways gives you a 10% return on that money. That might be better than you get in stocks. Let us know what you think.